Hi there, Bob Wolf here with Terra Firma Business and Financial Consultants. I'm an asset coach and a tax strategist. So this article I wanted to go through, I think is pretty important. Really all the articles that we're trying to, and content we're trying to provide to you as business owners to help understand what's going on in the economy, how your business is being affected by what we call our economic termites: taxes, inflation, time, laws and regulations, and debt. And so our goal is to provide content to help in that area, maybe sift through some of the rhetoric that is being shared out there. And really, as a community of small business owners, how can we band together to understand what's happening, what's going on, and what choices do you have? What decisions can you make? So before we continue, if you haven't subscribed already, go ahead and hit the subscribe button. Go ahead and hit the little gray bell so you get notified anytime we update content on our channel. Also, if you like anything that we're talking about, give us a thumbs up. Go ahead and add comments in there, questions, concerns, things that you'd like to see as future content as well, to help understand what's going out there from an economic termites to build your assets, build your tax-free cash flow. That's our goal, is to help you with that. So I'm going to go ahead and shrink up my face here and go ahead and dive right into our article for today: the soaring market that threatens to derail the economic recovery. So sounds interesting, doesn't it? So Wall Street investors have bought into the Federal Reserve's assurances that higher inflation won't last, but a looming trend will test their composure over the coming months: soaring home and rental costs. So there's already been some articles that we've done a couple of videos on talking about inflation, the cost of housing, how a lot of the inflation numbers that we've talked about in these last particular articles actually took out food and energy, which is, right? Good luck not eating, right? Of course you need food. Why'd they take out the food and energy as the numbers? Because the inflation numbers would be even higher. But with home prices already up by 15% from last year, which is not that big of a deal because of COVID, there was not a lot of activity, so to speak, but rents soaring to triple their normal rates in just the first 6 months of 2021. There's growing concern that housing costs could soon begin to nudge inflation higher. Could? Excuse me, if rent's going up triple, I think that's the cost of living. So help me to understand if that's not, right? With the great migration that's happening in the U.S., people shifting from states and cities to cities and counties to counties, so to speak, getting out of whatever they want to change the scenery, whatever they want to, making adjustments due to the effects of what's happened over the last year and a half. There's a growing concern that these will nudge higher. Shelter makes up 1/3 of key measure inflation. Okay, 1/3. Right? So how can you say nudge inflation higher when we're already talking about triple costs from rents in the first 6 months, or home prices increasing by 15%? Now, housing costs could eventually boost inflation by as much as 2%. Now remember, the Fed goal is 2%. So just housing costs could eventually boost inflation by as much as 2%. So that's 4%. What about the rest? This is only 1/3 of the key indicator. Okay, so by the end of next year, what about this year? Though the effects could be felt sooner, according to forecasts of Fannie Mae, the government-run company that stands behind half of the country's mortgages, a gradual buildup beginning later this year could spook markets and feed calls for the Fed to push borrowing costs higher. How do they push borrowing costs higher? They increase interest rates, right? Which has an effect across the economy as well. The move could choke off economic growth as Democrats fight to hold on to control of Congress. Well, Congress has already flooded the market with tons of money. Many banks have liquidity issues, which means that they have too much cash. Banks are trying to lend out money, but they're at 3-4%, way lower than what they're used to doing. So there's a lot of issues that are just from a mortgage or a banking interest rate perspective. With rents going up as the economy reopens, we will continue to see more upward pressure for overall inflation. Now, keep in mind too that what we're also talking about here is the reopening. Who shut this whole baby down, right? I mean, if you look at everything and you look at the situation and a lot of the cities and counties and states that keep things closed, even though statistical numbers are showing differently, it's causing issues as well. So financial markets have shrugged off the recent spurt in inflation, given signs that it is tied to temporary factors that could subside in the country emerging from the pandemic. Instead, investors have grown more worried about long-term growth. Okay? So that's what we want to be concerned of here. Now, sales of existing homes were up 45% in May over previous year. Well, that's not really a big number or a big deal. Why? How many houses were selling in May last year? Right? With the pandemic and people doing whatever they're doing, yes, they were probably selling, right? There probably were some sales, but to what extent, I don't know. But 45% is still a large number, right? Typical homes lasting just 17 days on the market, with 89% of them being sold in less than a month. Crazy. So very, very significant information here. Housing economists warn that high costs due to the imbalance will persist thanks to demographic pressures. For one thing, the biggest share of millennials isn't expected to reach peak home buying age for another couple years. Well, quite honestly, with all the migration, the changes, and everything that's going on with, you may have a millennial being at peak buying in a couple years, but what will home prices be? Will it be up or down? What will interest rates be? Will they be priced out of the market because home prices and interest rates went up, right? So that could boost inflation as measures in two government data series, the Consumer Price Index, an important gauge for financial markets, and the personal consumption expenditures, which is more closely monitored by the central bank, which measures a broader range of spending. The assumption is that if the price of the house that you're buying rises, that rent would be required to rent that house would also rise. Yes, of course, right? If you sell a house for a large amount, you're going to end up having to buy a house that's more expensive too. So what some people were saying is that, hey, time out, maybe we go rent for a little bit until things cool down. Well, rents are going up as well. So what's that look like? The rise in home prices could slow down by the end of the year as more homes are built and already high costs dampen demand. Well, I don't know. The affordable houses, how many affordable houses can they sell, right? And then how quick do they become unaffordable because they're being picked up, they're being sold quickly, right? Supply and demand is the game here. So spending habits and wage prices are all tied in part to the psychological phenomenon whether people expect inflation to pick up. Inflation will pick up. It will. If the Fed already has a 2% goal, anything above and beyond that, remember, a couple of my videos we've talked about 2% inflation. That means in 36 years, your dollar is worth 50 cents. 36 more years, so a total 72. Your 50 cents is now worth a quarter. 25 cents. So your dollar in 72 years, a lifetime, cut all the way down to 25 cents. Where did the 75 cents go? Poof. And that's just using the 2% Fed goal. Okay? So inflation is a key indicator of how your wealth is growing. And then we throw taxes on top of it, interest rates. We really need to understand the assets you have and that you want to grow your assets. What are they? What do they look like? Why do you want those particular assets? And how do they affect your economic termites? The price of lumber is elevated, of course, and builders have for years reported struggles to hire skilled labor, right? This is something we talked about in one of the other videos, skilled labor costs, right? Everyone's talking about kids need to go to college. Why do you need a liberal arts degree? What's that going to do for you? Why do you need a cyber risk degree? If you're going to go into cyber risk, when that changes on a daily, if not weekly basis, why in the world are you going to school for 4 years to learn about cyber risk when it's going to completely change that entire period? Why aren't any kids going to become heating and air conditioning, plumbers, masonry, electricians, right? Framers, drywall installers, roofers. These are all trades that are causing a lot of these issues and construction issues to be difficult to build because there's not a lot of skilled labor out there. So if this is something you have kids that they don't know what to do with their life, great. Go into skilled labor, earn a skill. Go start your own business as a framer. If you know how to frame a house, guess what? All these developers are going to need framers to build houses. How many houses are going to be built? Okay, so these are important things, and so just think it's important for us to understand this as small business owners. All these things affect us, and many, many more. So again, if you want to see more content like this, again, these aren't designed to scare you. This is designed to give you reality numbers. Okay, I want to give you reality numbers. I want to give you my common sense take on commentating on this stuff, and not some, reporter trying to sell news or papers or articles or clicks, right? So if you like what we're doing, subscribe, hit the little bell to get notified of all the upcoming content that we add. And if you like this video, give us a thumbs up. Watch our other videos. Give us a thumbs up. Add some comments. Let us know. Give us some feedback. We love feedback so we can help improve this community, our subscribers, and also earn extra subscribers based on the comments and the things that you say. So thanks so much. We appreciate your time. Have a great one.